Happy Wednesday out there, Team 42. It's your skipper here, Darius Dale, to present our macro minute for Wednesday, March 27th, 2024. As always, we'll start with the executive summary from today's lit up morning note. If you would like to see the analysis supporting these conclusions, as well as what to specifically do about them in your portfolio, you need to be a client of 42 Macro. So we'll start with today's key macro event, which is Japan jawbones the week yen, and plus fresh evidence of economic resiliency in the U.S. and Europe. So the nuance there is that the Japanese yen staged an intraday reversal from its lowest level since 1990 amid commentary from top currency official Masato Kanda. The Japanese yen is down 6% over the past 3 months, underperforming all major currencies besides the Swiss franc, whose monetary policy setting is also ridiculously easy. Elsewhere, the latest batch of leading survey data out of the U.S. economy were somewhat supportive of our persistent, resilient U.S. economy and developing sticky inflation themes. The latest batch of leading survey data out of the European economy were overwhelmingly supportive of our green shoots globally theme. In terms of market implications, thus far throughout 2024, there has been scant fundamental evidence that supports a row-row phase transition in asset markets. And for those who are unfamiliar with that research, where row-row just means you're going from a risk-on market regime to a risk-off market regime or vice versa. That's where you have these big factor leadership transitions that cause you and your portfolio to blow up, particularly if you're on the buy side. So we maintain our view that there's only moderate risk of a row-row phase transition until sometime in Q3, when we anticipate U.S. and global liquidity trends will inflect lower due to the confluence of less favorable policy from the Fed and Treasury and less of a panicked policy response by Chinese authorities. Refer to our last few macro scouting reports for more details. Our macro scouting report is our monthly deep dive presentation where we're going through growth, inflation, policy, liquidity, and positioning dynamics for obviously for all the major markets in the world. Usually around 100, somewhere between 100 and 130ish slides. We generally try to cover all that ground in under 75 minutes. So that's our flagship research product, very institutional research product, if to say the least. So transitioning to our 42 macro dashboard, as always, we'll wrap up with a question from our community. The question reads, what's the thesis behind a favorable investment in China? So it's hi Darius, and you're around the horn, which is our weekly report. You cite that China has one of the more favorable growth dynamics. Can you expand a bit more of this? I'm having a hard time seeing how this transpires, considering the potential contagion stemming from the real estate crisis. Is that because of the expectation of loose monetary policy? So I'll start by saying, things like real estate crisis and all that kind of stuff, that's not a tangible statement. What is a tangible statement is China's composite PMI is trending higher alongside most of the major economies in the world, with the exception of Canada. And China has one of the highest economic surprise index values currently, which means that its economic surprises are surprising to such a high degree that it implies that growth expectations amongst investors with respect to the Chinese economy, just as this sentence or this question suggests, are actually quite muted, which means that if the positive trend higher in the leading indicator continues to persist, which it should because of the aggressive monetary stimulus we've seen over the past 3 to 4 months out of the Chinese economy, then we are likely to continue to see favorable growth dynamics. So what we're trying to do is use leading indicators and the composite PMIs, leading survey data, what's happening with respect to policy, to front run the change in expectations amongst market participants around the Chinese economy. So we're at the leading edge of that process. 3 to 6 months from now, the question won't read real estate crisis. The question will read, oh my God, the Chinese economy looks a lot better than we all thought it would. And so that's the whole point. It's trying to front run that transition amongst investor consensus with respect, in terms of using the leading indicators. And this is all stuff that we refresh 6 days a week for our clients in 42 Macro. We try to think about the world from a quantitative standpoint, quantitative and probabilistic. That's what we do on the institutional side. Most of the research you're seeing on the macro front, the barrier to entry. I'm going on a tangent here, but I'm sick, so my brain's not working as sharply as it would be. So you'll humor me on this tangent. Most macro research you see is not institutional research. Most macro research you see is good, it's thoughtful, it's sexy, at the bare minimum, it's entertaining. But the reality is, institutional investors need quantitative, probabilistic processes so that they can make informed pivots in their portfolios to stay on the right side of market risk. What we do at 42 Macro on the macro risk management side of things is very different than what most investors are doing when they interact with macro. The barrier to entry to having a macro opinion is as low as anything in the world. Every freaking person at Starbucks right now has an opinion on where the economy's headed, has an opinion on where growth is, has an opinion on inflation is, no matter how little or how much research they're actually doing and how sophisticated and how consistent that research process is. So never forget that we're all being constantly bombarded daily with everyone's macro opinions and macro insights, yet 99% of that stuff is coming from a place of very little study, very little sophistication, very limited, kind of understanding of how this stuff all works. And I'm not saying that we've got it all figured out. We certainly do not have it all figured out, but I think we have a lot more figured out than the average investor spewing bear porn out there on the internet to get clicks. So we'll wrap it up there. Darius Dale presenting our macro minute for Wednesday, March 27th, 2024. Everyone have a wonderful day out there. So best of luck. Cheers. We'll catch you back here tomorrow. Cheers.